With our medical clients fighting on the front line, I think one of the key things is that it's made them realise that they're not invincible. You know, they are vulnerable to this virus and various conditions associated with it. So what it's really made many medical professionals do in terms of their insurances is relook at them. Not just from what am I covered for and am I adequately covered, and did I put in place the extra income protection as my income increased? It's made them question what is the value of this, as well as how can I also reduce my premiums? A lot of medical professionals, due to the cancellation of elective surgery, are not having any income come through, and therefore trying to mitigate their costs on their insurances are one of the key things that they're looking at. Any medical professional that I meet, and clients as well, it is absolutely crucial to have some essentials in your policy. You've trained for so many years, and really the only thing that can ever stop you from continually earning at the level that you're earning, whether it be high, medium or low, is an illness or accident. So these key definitions are absolutely essential. These are ensuring that you're covered for your own occupation, which is a must. Not just that I'm covered as a doctor, but if I'm doing surgery, that I'm covered for my work as a surgeon. Income protection definitions, being covered under a 3-tier basis, looking at duties, hours, and income. And also ensuring that your critical illness definitions are up to date. I think the key thing is, if I do suffer an event such as a heart attack, or I'm diagnosed with cancer or a stroke, the definitions to be paid out are up to date with medical advances and various technologies, because the differences between these sort of policies are vast and fair between all of them. Almost all medical clients that come and see me have some sort of insurance within their industry super fund, whether that be First State Super, Q Super or GESB. It's great that you've got the insurance. It's absolutely better than not having the insurance. But the key question that you have to ask yourself is, does that insurance cover me for my specialty? Does that insurance cover me in the event that I can't do surgery but still consult? Whilst I appreciate that many younger doctors are growing their incomes, don't have the cash flow for insurances now, and maybe therefore holding insurances in the industry super fund, there are various mechanisms and strategies that allow you to continue to do that whilst ensuring that you're covered specifically for your own occupation. Funding insurance premiums via super is certainly an option should that be right for the client. Some of the key advantages of those are reducing the impact on one's cash flow, meaning that they're not having to pay the premium out of their after-tax money. And another advantage is potentially putting insurance premiums into a tax-effective environment, which could sometimes mean making a non-deductible premium deductible. I think the key disadvantage of funding premiums via your super would be the potential tax consequences of a payout. Basically what this could mean is that a beneficiary would pay tax in a super environment when, if the policy was owned personally, there would be no tax payable. We've seen dramatic increases in insurance premiums, really due to the fact that the Australian insurers are paying claims. They do a wonderful job at paying claims, which benefits many, many, many people and our clients. However, unfortunately, what that means is, due to these unprecedented claims, the healthy people, or the people paying insurances, are getting enormous increases on their premium rates. We're seeing that many insurers, of course, have increased premiums beyond the 20% mark every year. And that's really because 6 or 7 years ago, potentially the actuaries didn't expect these amount of claims. And therefore, in order to keep reserves where they are, the insurers need to increase the funds coming in. Some of the key strategies we've been working with our clients for many years now is really looking at what they've got in place, asking the key questions about what do they need and what each component of cover provides a benefit of. Some of the key strategies that we've really used are, reduction in some of the benefits, cancelling off some benefits which may offset with one another, funding, if it is right, some insurances through their super fund, and also looking at their income protection specifically and the waiting periods, and whether that might be extending that out, splitting that up a little bit, just to ensure that clients are not putting themselves into a financial risk, more of a financial risk position, but looking at things a little bit smarter and saying, what is it that we need and how can we mitigate the increasing premiums that we're receiving. Various people have a number of different insurance policies. One of the key things that I always like to do when I meet a client and ask them specific questions is let them reiterate to me what each insurance policy is designed to do and why they have it in place. That really does guide me into asking the question of whether or not we can either minimise one area of one's insurance or whether or not there's an overlap. Many times I've seen clients have various insurance policies and they're overlapping in benefits tremendously, which as a result means that they're paying unnecessary premiums. Over the next few years, we really, unfortunately, do expect premiums to continue to increase. We've heard along the lines, and many insurers have alluded to the fact that income protection is significantly undervalued at the moment, and we're probably expecting around 20 to 30% increases on those premiums. The unfortunate thing is, the insurers are continuing to pay out excessive claims, and with this new environment that we're in, we'll probably continue to do so, which will unfortunately mean a dramatic increase in premiums. Some of the key things that Australians should start planning for is really, as I've alluded to, look at those different strategies. So look at the benefits. What is the reason for these benefits, and has that changed since I put in place those benefits many years ago? Whether or not funding via super is right, and does it suit my needs, and is it going to benefit me in any way? Looking at the waiting periods of your income protection and structuring that so it doesn't put you at financial risk, but it still covers you adequately. And I think the most important thing is really getting an advice professional who understands insurances and understands your industry that you work in to be a part of your team and give you recommendations on that.